Hello, traders. Dale Pinkert here. I'm going to run through the board and update us from Monday's forecast was for a weaker dollar, higher euro, higher cable. Start with the dollar that we peaked up here. That was Monday's broadcast, and we're starting to roll over now in the dollar. I think it's very possible we see a break back down towards 95.5, 95 at the worst. Daily looks poised to do that as well. Could call it some type of ABC correction. Longer term, I'm looking for higher highs in the dollar. In fact, this could be, wave 4 completing with some type of triangle and then a terminal thrust sometime next year. I expect dollar weakness to continue most likely into year-end trading. I want to warn everyone, you really have to be careful with year-end thin markets, and you really don't have to go back in your memory too far to see what can happen when markets are thin and most are away. All you have to do is go back to, say, crude oil. This is what happened the day after Thanksgiving. Okay. I know I was ready to short it higher the following week and didn't think there'd be anything this dramatic. And, same thing happened. We had big risk off that day. So, there is a possibility that you could have when there's no one on the other side of a trade, especially in FX near the year end, where people might have some needs to buy some Canadian, 500 million of Canadian, and there's no one on the other side. So you could have some pretty big moves on very thin volume. So, it's time to trade light if you are, and there's nothing wrong with calling it a year. The guys in Bermuda have called it a year, and don't be afraid of missing anything because they'll set it up for themselves and we'll see it. And when they do that, I'm going to inform you that, we're going to have another chance for the trade that you may have missed the last 5-6 trading days of the year. I have targets in euro that could take us up towards this 50-day moving average comes in a little over 114. So, I could see 1380 to 1440. And then the final drop could take us down to the 110 level, 110.5 down here towards the screen line and speed line. I'm looking for what could be an important low in euro down here sometime next year. And you guys know I've been talking about 98 in the Dixie, 97.50, 98. We did not get there. I would say that if we start, your first sign that the dollar has peaked, because it's possible that I can't forecast every jiggle. I sure try to attempt it and also trade it. And you end up on the right side of the market. If you do the right thing every day, tomorrow takes care of itself. So I would say before you have to say the dollar's in trouble, we would need closes back under, say, 95.5 and for sure under 93.5. So right now I'm considering this a little pullback, consolidation, and then one more surge up towards 98. 97.5 was a target from this formation. I've shown ad nauseum. We haven't completed it. As you can see, I'm willing to trade both sides of the market. The trend has been up in the dollar all year. So at this point, and it's really conjecture, I'm looking for the dollar rally to terminate. And I talk to guys that take the other side and say the dollar's just getting started and we're going to have this huge move in the dollar to 110, 120, maybe 100 on an extreme basis. But I think this is going to set up. We'll know because I'm not going to just short it at the price. I also need my momentum work to tell me it's okay to step in. I'm not going to short something when the RSI is 85. Okay. So, if you've been following my videos, that for inflection points, I need at least a couple divergences under the 70 reading. That's what I teach. Cable's actually outperforming euro on this bounce and could have 134.50 in it, maybe 135. It's possible we could get something like that. You look at the daily moving average of 50-day, maybe into year end, we rally here. I'm looking for the final low, or after this rally, another push under the 130 big round number towards 129. Yen is looking more likely. I know the first couple days after the Fed, yields actually went lower instead of higher. And I guess yen bears would say this is a, just a flag off a straight line move, and we could break down again. But I keep looking at this formation as a 1, a 2 that's incomplete, and we need a 3. What might support it is that yields did bounce back pretty dramatically in the last few days. Here's a look at the 10-year, which, at one point this week, a lot of people were getting pretty bearish on rates, thinking they were going to keep dropping. It looks like we've stalled and some type of triangle formation, and the breakout's going to be closes over 150. So if that happens over 150, you could be looking at 165 and then 170. So I'd be careful about being long treasuries into the end of the year. Here's a look on TLT. I know it's trying to bounce here, but when I look at the weekly chart, we did have a failure up here. And if you noticed on that big washout we had Monday, which I also advised not getting too bared up, because yesterday was the solstice, and I was looking for lows into the solstice. Depending upon what you trade, could have been the day before Monday, but we did have the strong move. So that's going to be important, the lows that we posted on Monday and Tuesday in the market, for there to be a continuation move to the upside. And they tried to sell the indexes off earlier. So, I mean, if we're going to have a blow off now in S&Ps, and that was it. And when you look at the daily, I have too many fibs there, but you look at the daily, it's sure possible, right? We never took out this low. And Monday, I was talking about that while we were selling off dramatically on Monday, and NASDAQ actually was even worse, took out this low, that the VIX didn't get close. Okay, so it was a failing rally in VIX. So even though NASDAQ was taking out the lows when the VIX spiked to 32, 34, the VIX was not showing any fear in that. Some people might interpret that as bearish, as people are still complacent. It's possible, but I think there's a good chance that the Santa Claus rally is not this week. It's next week. Then the January effect. A lot of people got very heavily long puts here, so maybe we're going to squeeze them. And there's a chance that the S&Ps make a move up towards 4,900. Okay, so this looks like a very important low in the S&Ps. I reserve the right to change my mind, either higher where I see something, or definitely the bull bear line in S&Ps have to be Monday's low of 45.30. I do want to cover oil, because tomorrow, my guest, that's her specialty, that's her bailiwick, Tracy Schuchart at Shy Girl, will be with us, and she's putting out warnings, and you guys know, just go play videos that I did a month ago. I was bearish up here, and was selling rallies, making money. A couple times I got taken out being bearish, but for the most part successful covering in here. The mistake was not recommitting or holding something for this, what do you call it, an ambush. So it was an ambush day that day. And she's telling people not to be short crude. So I'm going to ask her what the reasons are, because technically I could see crude, and I pointed this out as well on Monday, that I didn't think that crude was going to take out the low of the move that it made back here, and it would put in a higher low, and that actually happened. So What a surprise. So, I still think there's a shot for a recovery in WTI, maybe back above 76. And then I was considering this might be a good level to go short. So going to be great to talk to Tracy tomorrow and get her forecast. I did see a tweet yesterday and from Tracy that Libya postponed their elections, and that was the whole culmination of the truce. And oil production was getting better in Libya, and no elections, who knows. Just to move down the line a little bit, talked about the metals recovering, continuation move in silver. I thought we could trade 23 to 3.5. Thought gold still can make one more move up towards maybe 1820, 1830. That would kind of play in line with the dollar weakening some more, back under these lows. Should be supportive for the gold. But then just like the dollar, I'm looking for one more low. In the silver, I think we're going to see the 20 big round number taken out. I like to see those, 2140 was the low here. So I'm still looking for one more flush. What's going to be my market tell, and let me give you something to watch going into next year. Say, for example, I'm right, and silver breaks this low and by $1 and goes to 20.5, and gold ends up peaking out up here and has one more trip down towards 1730, 1720. What's going to be important to me is what happens with the gold silver ratio. So, we've come off this high, we're trading under 80 now. This was something I talked about, that if you want a bull market in metals, you want a bear move in the gold silver ratio. You want silver to be dominating and be the relative strength leader. So say, for example, I'm right, and the metals do make a new low, say when the dollar's about 98. That's going to be another key for me on looking for prices to buy metals and miners. And while that happens, the gold silver ratio makes a lower high. So looking for a lower low in silver, right? But looking for a lower high in the gold silver ratio, a failing rally, that would be a pretty good market tell. Okay, that's something that I'll be looking for next year. And I think just show, Apple had a good day yesterday. I know when I was talking about it, it said it could be an ABC, but we could still try and fill this gap. I'm pretty neutral on the market. I do think that NASDAQ is still weaker, much weaker. And if I was going to be long the market, I'd be long things. The S&P would be my preferred long over it. So Apple, trying to bottom, had a decent update, and Microsoft held where it had to. Netflix trying to turn the corner. There's nothing, and I was talking about this Monday, there's nothing that bearish I see on a lot of these charts. Tesla's starting to get some legs underneath it from 880. Guess it absorbed all of Elon's selling. Google also, just shook out these lows. So I think the better short in the market's going to be sometime in the first quarter. And I think initially a weak dollar is going to fuel everything, commodities and stocks. So I want you to trade lightly and write down for 2022 that you're not going to do any trades that you haven't planned for prior. Okay, no more of coming in and saying, you know what, the Aussie looks good, I think I'll take a shot. So, the way I'm going to be approaching it is I do think the Aussie has not bottomed. So maybe sometime after the new year, I'll try one more short in Aussie, looking for under the big round number at 70. And it's not just a feeling, okay? It's not just because I feel it. It does line up with the narrative I'm working on, but there's also something pretty technical here. When you look at the daily RSI, there's absolutely no divergence. It was a confirmed low. I'm a believer that markets rarely bottom when momentum is confirming price. So this tells me as a trader that I could look for, there's a high probability there's another low coming. So I'll be looking for some selling opportunities in Aussie into New Year. So that's a wrap for me. Make sure you're here for Tracy Shuchart tomorrow. She also, has some views on gold, and I'm going to ask her about the dollar. And she's also, last time I talked to her, a fan of uranium. So energy being her bailiwick, she has to pay attention to the dollar and other outside markets that could affect it. So enjoy the rest of your day, everyone. Thanks for your attention. If you like what we're doing here, give us a like on the video, and do yourself a favor. Come in and hang out with us in TradeGateHub.com. That's a wrap. Remember, don't just count your pips, count your blessings. Everyone has them. All you have to do is think about it. How about a simple one like this? Were you able to see the screen today? Were you able to hear my voice today? You have money that you're speculating with? I rest my case. Adios, everyone. I'll see you tomorrow with Shy Girl.